Okay, so let's make 2017 EURNZD backtesting as students requested, because he basically did already the backtesting on this year and he requested and he want to see basically if he did his backtesting right. So let's get straight into it. So let's start. Now, what do we have at the moment from a weekly perspective? So on the weekly, what do we have is clearly we have previous support, Nato's resistance, and we can expect from here the market to make a push to the downside, basically completing this impulse correction and impulse pattern to the downside. If we go down on the daily, let's see if we have already an opportunity. Now on the daily, we can kind of have this left shoulder head and right shoulder and basically this impulse correction, and we expect the next impulse to the downside. So let's go on the 4 hours and see if we can look for an entry. I will now take, as usual, my environment indicators, and I will not be switching them on and off as usual. I will just keeping them on, and keep in mind that you should ignore them on all time frames except the 4 hours, as you know. So at the moment, what do we have here? So the environment is still bullish, but we want to take short. Okay, the environment changed it now. So if the market will start a retracement, we can take a short from here. Let's see if it happens. Okay, so the market just goes down without any kind of retracement. So we can just keep going on. There was no opportunity at the moment. Let's keep going and see if the market provides some opportunity. Okay, so at the moment, this pullback was quite strong, but overall on the weekly, we can expect more continuation to the downside, right? We wanted to see basically this leg extend to the -27, basically creating a lower low. So we want to see the market go at least to this -27 here, because obviously impulse correction and impulse, the next leg is supposed to go to the -27. So we want to see more continuation to the downside. On the daily, we have an ICI, but this retracement is a little bit aggressive. We have to see a couple of candles and then we can be taking the short. Let's see how price action develops on the 4 hours. So obviously on the 4 hours, as you can see, everything is extremely bullish. Let's just see how this will develop and basically what the market will give us. So this is quite kind of good, okay, because look what happened. Impulse correction, but the market is failing to making the next impulse to the upside. The environment obviously is bullish, MACD above the 0, EMA is cut for long, so we still have to wait for the environment to shift. So the market created some structure here. Obviously, this is the low. If this low will break, then the environment will shift. And on the retest, we can be taking this short. As you know, it's always the same rules. Not breaking. Okay, it broke now, but we still don't have the change of environment. Okay, now the market changed environment. Okay, this is pretty simple setup. Extremely easy to identify where the structure is. This is the previous support, which is now turn resistance, and we can obviously take our short from here. When it comes to our target, we can even be more conservative. Let's just take the normal ICI target, so Fibonacci from the high to the low. The -27 is here, and stop loss above the high. So just regular ICI strategy to the downside. The market satisfied all the rules. Let's see if we get triggered. Okay, so we are now in the trade. Let's see if our target gets hit. Okay, so we are now risk-free on the trade. It seems okay, perfect. So we got our first 3R on this ICI to the downside. And yeah, the pattern completed. Let's see what will happen next. Now, also in the weekly, now the -27 of the weekly is probably hit. Yes, it's hit. So we want to see from here continuation to the upside. Okay. So this is the first break of structure, right? So now we have left shoulder, head. If the market will go down, what we will have? Left shoulder, right shoulder. We want to see an ICI to the upside. So let's see if the market will make the pullback. Okay, so from here, I believe we can already be looking for a long. Okay, so let's switch again because something went wrong with TradingView. Okay, so at the moment, this is the situation that we have. Let's see what we will get. So the market is making a deeper pullback. Remember that this is the left shoulder. Here is where the right shoulder is supposed to form. At the moment, the environment is bearish. We have to wait for the environment to change back to the upside, back to a bullish environment. Still bearish, still bearish. Okay, now this is the exact moment in which the environment changed. This is where the structure is. And we want to see this area retest. And what about the target? Now in this case, since from the weekly we want to see much continuation to the upside, we can be taking the second target. So instead of be taking immediately the minus 27, because obviously we will never get a 1, 2, 3. To get a 1, 2, 3, we should basically use a very, very conservative stop loss, very, very tight, which is obviously something we don't want to do. So since from the weekly we expect a big push to the upside, and let's actually see what we have on the monthly. Let's see also what we have on the monthly. Okay, perfect. So on the monthly, we definitely want to see a big push to the upside as well. Why? Because we have this big information. So we want to see a push to the upside all the way up to this area. So obviously look at what this becomes on the daily. On the daily, we want to see a push all the way up to this area here. So obviously we can take the second target because we definitely want to see a push to the upside. Now, as usual, let's be conservative and just consider basically the second target and not take the monthly target, because as usual when we're backtesting we want to basically take our worst case scenario. I will reload the chart because TradingView just got stuck. Sometimes it happens when you're backtesting. Don't ask me why. I tried also emailing them, but basically they don't really know what is the problem. Sometimes TradingView starts having some troubles. So I don't want to see what happened. I want to just use the reply tool. Okay. So as we were saying, basically we can be taking the second target up here for a 1, 2, 3. Okay, we did get some price action that we didn't want to see, which is this candle here. So anyway, we wanted to take a 1, 2, 3 to the second target, which is this. So at the moment we are already in the trade. Obviously we didn't want to see this candle already, but anyway, now we have it. So this is the situation that we have. Let's see if this will be a good trade or it will be a loss. It seems it will be a loss. Okay, so definitely a loss. So this is a -1R. And the market is not ready to make the push to the upside, but nothing really changed, right? Nothing really changed. The market is still bullish. We still have the possibility to complete this impulse correction and impulse pattern to the upside. So we are still looking for a long on the 4 hours. So let's see if the market will, now obviously the environment is bearish. Let's see if it will shift back to bullish. Okay, so it's starting to break. The environment is still bearish, but the structure has broken to the upside. Now the structure is bullish. Let's see if the environment will change. Not yet, not yet, not yet. Okay, this is the candle that made the environment change. So obviously we can take the long from here, either on the next candle or on the same candle in this case, since it's very near to the structure. So let's just pretend that the second candle, as usual, when we're backtesting, we take the worst case scenario. So taking our Fibonacci from the low to the high in this case, let's see if we will get a 1, 2, 3 to the -27, just to be as conservative as possible. And yes, we definitely do get a 1, 2, 3 with a stop loss obviously below the low, which is this one here. So the stop loss below the low, protected by structure. Let's see what happens. Okay, so we are triggered and in the trade. Okay, so this is obviously a choppier pair. Then EURNZD is not that great pair, but let's see. This wasn't supposed to happen, but could be a manipulation. Okay, so I think it was a manipulation because now the market is closed back above, and obviously now what we have is a situation in which, yes, we are now risk-free, but keep in mind that if the market will go back down here, since it's so choppy, look at how choppy it is. Okay, super choppy. So this pair makes a lot of spikes, but at the moment our entry is very near to the new structure. Okay, so yes, you can go risk-free, but keep in mind that the market could easily, basically, because we took an entry that, and then the market created this new structure that, as we said, it was not supposed to create it. It was just supposed to go to the upside from here, but it created some structure that is very near to our basically order. So in this case, go risk-free, but if the market goes back down and then starts going back up and it's basically respecting the new structure, this is a valid entry, right? Previous resistance turn support. So we have a new entry here. So basically, yes, we would get stopped out, but we have immediately another entry. So let's see what will happen. Okay, so the market is going for the retest of the structure. And yeah, exactly what we expected actually. So yeah, I mean, either we don't go risk-free on this trade, or you basically go risk-free, and then as soon as you see the market that basically goes down, takes you out and starts going back above the structure, then you basically take another trade. But in this case, if you see that the market creates new structure very near to your entry, you can't really go risk-free, right? Because your entry needs to be protected by structure. That is when you go risk-free. But in this case, it's not protected by structure, because basically your entry is very close to the structure. So in this case, let's just consider that you remained in this situation. So you didn't take another trade. You just kept the original trade for the sake of simplicity. And yeah, it seems the market made a nice push to the upside. And let's see what, okay, so actually it exploded to the upside. But yeah, from the monthly we could expect it, because on the monthly we had that very strong upside target. But anyway, we don't want to take the target all the way up there, at least not in backtesting, because we want to take a worst case scenario when we're backtesting. So at the moment, big push to the upside, nothing we can really do now. We're not really interested in anything at the moment. Let's see on the weekly what we have. So on the weekly, we have a big push to upside. So definitely we have an ICI here on the weekly. Impulse correction, you expect the next impulse to the upside. Let's take our Fibonacci from the low to the high of this impulse. The 382 is here. We want to see the market hit the 382 before we can basically consider it a valid ICI to the upside. So we have to wait for the market to hit the 382. Okay, now the market has hit the 382 and we can be looking for a buy opportunity from here. So let's see when it will provide it to us. At the moment, the environment is bearish. We have to wait for the environment to shift to the upside, which is happening exactly now. So where is our structure at the moment? Is obviously here. So you can see it, support, resistance, resistance, support. So we want to take our entry from here. What about our stop? Obviously it will be below this low. And what about our upside target? As you know from the weekly, this will be the previous leg. So Fibonacci from the low to the high, minus 27 is up here. And the first strong number below is 1.5580. So we can take this trade. Let's see how it will go. Okay, so the trade is triggered. We are now risk-free. Let's see how this will go. Okay, definitely still not break even, basically break even. Let's just take the worst case scenario and consider it break even. So this is because obviously, yeah, it seems a miss by 1 pip, but you know, there's spread and other things. So let's just consider the worst case scenario, break even on this trade. Let's see if we get another entry. Doesn't seem so. Okay, so at the moment it does seem quite bullish, okay, because what do you have? You have a very clean M formation. The market is below the EMA. So now if the next candle will close above the EMAs, then we can definitely take this long. Okay, that was pretty crazy. And what kind of situation we have now on the daily? Okay, so this was actually a gap. So on the 4 hours, Forex.com will not show you the gap, but actually this was a gap. And I believe this was a Euro elections, because I remember basically I was long in this gap in 2017. And I believe this was Euro elections, and I was long on Euro USD, not EURNZD, but we had this big gap and we did have this kind of similar price action. So yeah, I believe this was actually a weekend. So obviously, if you were in the trade, I don't believe we were basically that this is a good situation to be here on EURNZD. EURUSD was presenting a better opportunity, but at the moment, this is the situation. So let's just consider a worst case scenario and missed trade, okay? As usual, try to be worst case scenario when you're backtesting. So let's see what kind of situation we have here. So not an ICI because the market didn't retrace at least to the 382, I believe. Yeah, we didn't get the 382. So at the moment, the market is in the middle of nowhere, showing no setup for us. Let's see basically what we have. So in this kind of situation, you can consider actually to expect a continuation to the upside. Why? Because you have up, down. Everybody started to buy, they put their stop losses here below. The market went to hunt all those stop losses, and now you can expect continuation to the upside. So you could actually consider this a valid ICI to the upside, okay? But as usual, let's just keep it the worst case scenario and not consider this a valid setup because, yeah, just to take a worst case scenario, but this is actually a very high probability trade to the upside because banks have already basically taken out all stop losses with this manipulation to the downside. So this is an easy ICI to the upside with a very good probability to actually working out, okay? And this is the entry exactly here, right? Because you have previous resistance, turn support with a bullish environment, stop loss below the low. So this is actually a setup that I believe has very, very, very high probabilities of hitting target, but I will just keep it as simple as possible and only trade standard ICIs, okay? And standard patterns. Yeah, in fact, this was a very high probability trade because basically they had already manipulated everybody, but let's just not consider this trade, just to always keep up worst case scenario. So let's see what kind of situation we have here. So at the moment, still nothing. Okay, so this is quite interesting situation. We have a nice ICI to the downside here. Now the market looks pretty overextended to the upside. Also, if you look at the weekly, it looks pretty overextended to the upside. We need to see a deeper retracement. Let's see what you have on the daily. So on the daily, we've already seen it. Basically, we have previous support and resistance at this level, impulse correction, and you expect the next impulse to the downside. If we go down on the 4 hours, what do we get? So on the 4 hours, the environment is bullish. Let's see if it will change. Okay, so now the environment is actually bearish. Let's see if the market will start a retracement. Okay, so what we can do now, take our Fibonacci from the high to the low. And also let's determine our target. So taking our Fibonacci on the retracement, the -27 is here, which is a target that makes a lot of sense. Look left. Okay, the previous low, definitely an area that we want to see the market hit. And when it comes, we have the target, our stop loss, we already know it. We will take our Fibonacci from the high to the low, right? We can take an entry, we will now determine if we can take it from the 382, stop loss above the 78.6 or above the previous high, and target at the low, right? So yeah, we can take our trade from the 382, stop loss above the 78.6, target at the target from the ICI, standard target of an ICI pattern. Let's see. Okay, we got triggered, a little bit drawdown, now in profit, and obviously now we are risk-free on the trade. Let's see what will happen. Okay, let's see. Okay, target hit. Perfect. So let's see if we have any other opportunities before we end this first backtesting session on EURNZD. So the market just continued to the downside, and no, doesn't seem we have any kind of opportunity, and we can continue next time with EURNZD. At the moment, what do we have? We have plus 3R. Let's not consider this plus 3R here. So plus 3R, break even, plus 6R, 5R, plus 8R. Okay, so overall plus 8R for the first half of 2017 on EURNZD.